and what is not yet priced in. So the market has been in a free fall for a few months now, a few months, it's not a few days. It's been happening, and in the past, there was always the last general that Apple has always been a safety line. So another thing to understand is that recently, just a few hours ago, New York City is going haywire because COVID cases apparently are going vertical. So apparently, I'm not sure if this is really accurate, but hospitalizations are increasing rapidly. We did hear last few weeks and a few days ago that there are phenomenal spreads happening in UK, like Boris Johnson did say that. We are seeing bars actually closing in Australia, albeit the fact that the cases are high, but they're all saying it's mild symptoms. Either way, I think a majority of countries today are more, how should I say this, they act faster. So in a way, either it's hysteria or paranoia. This will, of course, affect a lot of stocks, particularly reopening. That's why we gave a class about the great fade away and why we advise people to short on reopening names. Not because we are really promoting the fact that COVID cases would spike, but simply because when there is news about a potential spreading of Omicron, with or without actual data, fear is enough to cause people to be afraid and to take profits. And if it's really gonna be worse, then it could be a panic sell-off that is also substantiated with data. A few things that's also being asked, what is priced in? So this week, we already got what has been expected. Everyone's been expecting the Fed to increase rates, and prior to the Fed meeting, everyone was already expecting this. So it comes sometimes as a surprise. If it was an expected outcome, why then did we sell off further if it was expected? So sometimes it could be simply the market having a delayed reaction, because initially when the Fed did say this, the markets actually rallied, and then the next day after, they sold out. Let's just go through what happened this week. Majority of the Fed members forecast 3 interest rate hikes in 2022 to fight inflation. And Wednesday showed that 12 out of 18 FOMC members are expecting at least 3 rate raises next year. That is up where only half of the Fed members saw at least 1 hike in 2022. The Fed also dialed down their GDP projections for the year and even raised their inflation forecast. So the Fed is already increasing their Fed inflation forecast for next year and next year to as high as 5%, above the previous estimates of 4% after a reading of 6.8% inflation a few days ago. You're also seeing inflation expectations continue until 2023. So those are up from all the estimates. The expectation of the central bank is also admittedly an unemployment rate still improving from 4.8 to 4.3%. And the government body is also accelerating the reduction of the monthly bond purchases this Wednesday. The Fed will be buying $60 billion of bonds starting January. This is going to be half of the level prior to November taper and $30 billion less than it had been buying in December. So it's still buying actually, but it's just less than before. The central bank as of now is still holding their benchmark interest rates to zero, near zero. So the bulls would say, well, you've expected this, so why react? The bears will say, wow, interest rate hikes, the growth stocks have to be pummeled even further. So usually you've got growth stocks getting killed. And for a while now, the SPX and the QQQ, some people tweeted this meme, and I have to agree. We typically really share our own insights as well, that the entire market in the US was simply held up by very few companies. You've got the Google, the Apple, the Tesla, Amazon, Nvidia, Microsoft, Netflix. It was a carnage. It was really murder. But because Apple was strong, it masked that reality. Now, if you take a look at this building, if these stocks collapse, what would happen to the market? It would be an entire murder. I don't know what you call it, right? That's why the title is Apple Finally Succumbs to the Sell-Off. So this is actually just year to date. If you thought that Apple was so strong, it really was. Apple went from a low of about $116 to almost double this year. If it rallied even to $200, it would have been a 100% performance for Apple for an entire year when the growth was something less than 2%. And we're not talking about a small company here. To add $1.5 trillion of market cap to Apple usually precipitates a really strong growth. So a lot of people are saying there is no growth in Apple. Why should it be trading at $3 trillion with 360 billion and just about 100 billion of earnings? So would you really pay that much for Apple? So people are questioning the growth or the value of Apple because it has zero growth and zero value. Now, this is Apple. If you take a look as well in the last year, 2019, it was 35. We're almost hitting nearly 5x in just 2 to 3 years. So there's a lot of people clamoring, where's the value in Apple? And for a while now, nobody wanted to sound the alarm. But last night, it finally crumbled 4%. So at some point, it did happen before. This is 2021, around February to March, Apple fell something from 150 all the way to about 120 or a 20% sell-off. So while we think that Apple will fall, we're not really talking about a catastrophe here. A pullback to mean reversion simply because of their quote-unquote resiliency or stability, or the fact that they're the biggest when it comes to the future of wearable metaverse in the future. I don't know if it's about the metaverse or it's because of their domination in the apps in their smartphone. Either way, even from just a technical standpoint, the bearish case for Apple, even from a historical standard. So you take a look at all the corrections that happened, at least for the last few years. Well, this one was one of the strongest corrections of 2020, which is the pandemic. Apple fell from 80 all the way nearly 30% here. So that would be one of the biggest crashes. This is 140 all the way to 110, nearly 30%. So 180 minus 54, even at worst, it would be about 130 to 140, and perhaps a mean would be 150. That said, a 20% crash on Apple, simply because it is still the largest weight in your S&P 500 or your NASDAQ, will make a big bear market move if it just crumbles by 10, 20, or 30%. So be aware that because it's crumbling, you will potentially see more put options on the NASDAQ or on the S&P 500. So this is Alphabet. Amongst the FANGs, the strongest, the ones that are holding the market, your Alphabet is not being questioned for the momentum, simply because, well, you could see that from 2019 to 2022, comparing this 3x move of Alphabet, you do have the revenues growing that fast. And indeed, when it comes to reopening, Alphabet's, or AKA Google, YouTube, has been experiencing triple-digit growth, which necessitates that either you're a fan of growth, but Alphabet is actually still strong among the FANGs. So nobody's questioning this yet. So in case Alphabet does pull back, you do have a lot of supports at 2.7 and currently 2.9. That means that a minute 10% is not going to cause panic, at least for Alphabet. Meta Platforms hasn't been that strong among the FANGs. Still though, from about 250, this still 250 lows around Feb and March, it managed to still go up. It's more than about 20+% in the year. So whether you're looking year to date or away from the all-time highs, Meta Platforms is actually more sideways in nature, despite all the scandals about the Congress, on the teenage suicides on Instagram, on how socially toxic these have been for an entire generation of these children and teens, tweens, and so forth. So we're seeing actually that Meta platforms, it's actually getting more of a sideways action. While there could be more precipitous falls, it could fall 296 or even as low as these levels of 260 back again. We do see that the market is more sanguine about Meta platforms so far. So it looks more like a sideways for Meta platforms. Microsoft is the strongest among the FANGs. I'd say Microsoft momentum has been really it was still a story of the 40% growth of their revenues despite so Amazon Web Services and Microsoft, they're the ones holding up, and Microsoft has been in a stellar performance all year long. So I don't think there's a question why it's up a lot. So this one, 2021, still managed to hit 50-70% from 200 to 340. Also the primary leader for the metaverse with a lot of metaverse plays, whether we're talking about the Omniverse, the work platforms. So I don't think there's enough momentum to sell Microsoft, and people will still be buying any dips of Microsoft. We do see this trajectory still strong. Nobody's really questioning this strength. So Microsoft at 300 will be bought if it will ever fall. So you'll see that it's still trading on the upper end of the channel. It's what's been holding up the NASDAQ or the S&P 500, Microsoft. Tesla as well, you can see the strong outperformance. It's up 50% actually for the year. You've got the January's at about, 600 to 12. So it was initially 100% and then corrected to 900, or still up 50% for the year. I'm not sure how many bears there remains on Tesla, as Tesla is actually the $1 trillion company among the FANGs that is presenting so much growth out there. Either they re-rate Tesla simply because of Fed rates. I'm not sure if it's interest rates. Either way, you'll see that there's enough people in the world to support this 800 area if Tesla still falls. So amongst the FANGs, actually, Tesla presents the growth on the FANGs. So it's just gonna be a valuation debate on how high you pay. Sorry about that. There's a lot of noise in the area. It's a question of how high you pay for the secular leader of the decade. So Tesla is experiencing the Amazon-like decade. So I don't know how you actually value it. Some people argue it should be 3 trillion, 5 trillion. A $3 trillion Tesla means it's $3,000. A 5 trillion industry for Tesla is 5,000. Now, this will depend how fully we believe on how big will we adopt, how fast will we adopt this electric revolution. So far, Tesla is generating 63% market share in EV in US. I haven't gotten like the full picture of the world. But if we're going electric, we understand why Tesla is getting that premium amongst the FANGs, amongst the $1 trillion club. So amongst them, this is still going to be a buy the dips. If Microsoft is in a buy the dip, Tesla is still in the buy the dip. So you still have that channel wherein you'll get a lot of people debating with you. And the debate will mean that the bulls win. The bulls still win for Tesla. This is actually the only company of art that's really up for the year. 50% up for Tesla. We could see Amazon this year was in a sideways mode the entire 2021, 2.9 to about 3.4. So it's just 10% for the year. There has been some sell-offs when it didn't manage to beat expectations on their decelerating growth on their e-commerce as well as AWS. So it's we're seeing Amazon go sideways, not this just the same as what happened before here in 2019 to 2020. So usually the FANGs, when they do have some deceleration, all that happens is that they just consolidate their gains in a 1 to 2 year timeline, or sometimes 3 years. So this is perhaps what's going to happen either with the NASDAQ or with the Apples, as they do have the biggest and the brightest outlook even for the next 10 years. So the big tech is still the Web 2.0 leader. And if we're going to go Web 3.0, a lot of people still believe that the FANGs are still going to lead that Web 3.0 world. So there's that hegemony in the incumbents. This is your NASDAQ US 100. In general, if you're looking on a milder dip for Apple or Tesla, you're just really looking here at about 15,200, which is almost nothing, negligible, like 5% pullback. But if you really believe that this interest rate hike is gonna make people panic, then it's a bit weird if you'll ask me, because it's unknown. Usually people will panic on unknowns because pandemic in the past in 2020 was unknown. Unlike these Fed interest rate hikes, which are very well televised or telegraphed in the markets, information has been digested for quite a while now, since I would say since February 2021. So it's been what? Almost a year now that we're digesting a lot about these growth stock valuations that will get killed simply because of higher interest rates. But let's assume you're typically a bear. If you're a bear, then I would think that a 20% slide would be enough. So the worst case is 12.4, which gets you back to March 2021. And that would only happen if Apple, in my view, crumbles. If Apple and Tesla crumbles, then you get that 12.4, and that would be your opportunity for your capitalization mark. But if you don't really have Apple or Tesla fall, then we'll just get a mild sideways action somewhere here about 14 or 15,000. So far, the market hasn't decided what to do. Is it a 10% sell-off or a 20% sell-off? So Apple succumbing to a sell-off could be one of your last general to fall. Now, when you are looking at the market on what you will do, these are useful questions to ask. Did this company unquestionably build a strong foundation that drives long-term growth? A lot of Tesla bulls would argue yes. A lot of Apple bulls will argue yes. And that's the reason why, no matter how outperformed they have been, it's one of the reasons why these are considered cults. We call them cults, which is like of a higher religion, where the hodl club will always stay. Because the question is, does it have a lifelong relationship with its customers? And these are really what drives long-term performance. The FANGs are the FANGs for a reason. The NASDAQs are staying near all-time highs for a reason. Big tech is unquestionably almost like treated as cash by the market. So I do believe that it's just going to be a buy the dip type of name. If you are going to try to short it, understand that you're just looking at a 5-10%, at most 20% reward. That's just my view. So like if you make a put option on Apple or the Tesla or the NASDAQ or in the S&P 500, really, I'm not really thinking of a bearish wave, because this really is always the one that's driving long-term growth for the world, not just for the US. We're talking about the world, because these are global leaders. Now, these, however, might be something that people who would ask on the outperformance. So while there are these last generals that would probably just fall 5 to 20%, you might want to take a look at companies that actually was strong this year that you might question the hegemony. So General Motors actually rallied 50%, 40 to 60 this year, 63. General Motors sports about a 10% market share in US EV industry. Of course, some people would argue that it deserves to get valued high as well, simply because we're in the electric vehicle arena. In fact, during the sell-off of 2020, it went from 16 to 60. So some would argue there's value here. It's a secular trend beneficiary, and it isn't like as massively, lavishly valued versus the other EVs. So it's really, it's up to debate. Either way, if we don't want to discuss fundamentals, let's just take a look at the charts. So General Motors, in my view, has a lot of value investors, those who will not buy a Tesla, but will believe and support the EV industry and the Biden infrastructure bill. So owing to that effect, you will have, in my view, a huge sideways action from about 50 to 2. You've got a buyer at 52 first or 55, somewhere here. So any 10% sell of General Motors will have a buyer. So these are the harder ones to buy a put option from. Nonetheless, if you are very bearish, you can actually buy put options here that are almost like 3% yields. So the nice thing when you are doing a little bit of a contrarian is that the put options are minimal because the consensus is just a buy the dip on these types of names. Now this one is also an interesting risk reward in our view. Rivian was actually trading more than $120 billion market cap prior to earnings, and everyone was expecting the earnings to actually slide. So, and now we've got the numbers. Rivian shares are sliding, I think 5 to 10% down after hours, after the company cut their 2021 EV production expectations. So whereas nobody's going to question Tesla's $1 trillion market cap, a lot of people are, of course, asking, why would Rivian shares be trading at $120 billion if it's nowhere in the scale or nowhere in the cycle of Tesla? So this one, in my view, has larger reason to prove the market. And because their production targets are so small, look at this. Their 2021 production target is 1,000 vehicles. It's not even 100,000 vehicles. The company said already that it's facing supply chain issues. They have a complex battery powering the vehicle. They're also updating that they have to build a $5 billion plant that will only become online in 2024. So when we're talking about growth expectations, I'd say that Rivian has too much growth baked in and too little to show for it. That's why we are short Rivian and we have no reason to cover. We don't know whether it will fall 25 or 30% in the next few weeks or next few years, or I don't know actually, but it just doesn't feel right that Rivian is trading as if it's as good as a Tesla, just from relative valuation. So this is Rivian. Ever since IPO, we were bearish. We never understood this rally. I think it was just a squeeze play for the IPO players, you know, the typical pump without fundamentals. And then eventually it just goes collapse below this IPO price of 95. Actually, I think the IPO price was $40 or was it $30? I think like it should fall there. I just don't see the reason why it should outperform. So let's just read through the news. Shares of Rivian are plummeting 10% in after hours trading. Should you continue to short this? My argument is a yes. If you are already short, perhaps number one, you want to add more shorts on any rally. And in a bearish climate, this one is the one that you probably want to short more. So supply chain issues, production issues, revenues almost little. You've got Ford also bailing out with Rivian. Ford competes with Rivian. We were telling that to a lot of people prior to earnings. And production delivery is not there. So also, of course, no revenues equals no earnings, not enough. So aside from production snags, they also said the total reservations increased to 71,000. Okay, if we talk about reservations, the Rivian 71,000 is nowhere near what Ford has, nowhere near the orders of General Motors, and they're both cheaper than this. So, you know, this is an easier short. Digital world, obviously there are people who are saying that this Trump SPAC is weird. And we would have to agree that it's a little bit weird why it would be passed. So in my view, it looks like a little bit of a business plan with nothing to show for it, but just a business promise. No revenues, no numbers. And when you're up to the market to be judged in the longer term, and you know, it doesn't really will pan out well for anyone investing or speculating. So we saw this pump 10 to 160, lower high here at 90, lower high at 70, another lower high here at 65. We are seeing lower highs at 51. The thing is, I don't even know why it should trade at 50. I don't even know why it should trade at 10 to begin with. So I would just remain short. And if I get squeezed, it's really more of size. I think it's just size. So I still kept my shorts on DWAC. Shorted at about $50. It rallied to 65. I didn't budge. It's now still $50. I'm just keeping the short. Zscaler, we were giving short here prior to the numbers, prior to earnings. Earnings wasn't up to par. So in a market where you have to perform to stay on top, I don't think like Zscaler trading at 50 times, 60 times price to sales is gonna stay afloat. So you've got the companies that are not earning money stay there, very lofty. Zscaler has gone what this year, even for just this year, almost double, 100% up. So if you're questioning why companies are doubling in size, if you're probably thinking that it shouldn't, that it should pop, perhaps you look at the likes of Zscaler. So Zscaler has been a pandemic favorite because cybersecurity, a lot of remote work. But if they can punish a Zoom video 50 to 70% down, now I'm not saying that I'm quite familiar that Zscaler is going to fall $180, but maybe yes. So we are, of course, talking our books. We're short Zscaler at 300. And people are still recommended to short at 310, 320, or 300 or 295. Even if it rallies up, to me, it's a short. Now, Live Nation, we have been actively promoting a short here. We've seen how a lot of Omicron variant has just been noise. And there is, in my view, gonna be a deceleration on outdoor events. And the thing that will make people also afraid with Live Nation has to do with the lawsuits. So the Astro World was not successful. The Travis Scott legal settlement lawsuits are spanning like billions of dollars. And Live Nation does not have enough to cover it. Either dilution of shares, either they escape those lawsuits with a little settlement, but you just really have more questions than answers. That's the reason why I think this all-time high is not going to be sustainable. So when Astroworld news broke out, it was somewhere in November. It still didn't gap down. And I think this was the Omicron. It managed to fall. Every rally, we just felt it was more of a short on any rally. And this one, I think, is getting the panic because of the cases spreading. Either way, cases might be mild, cases might be real, but this is also showing to you that the downside is bigger than the upside. The risk is really, the reward is small, the risk is huge. When you get that type of a risk-reward ratio, you want to trade on the bear side. So you still want to buy puts on Live Nation. Either you want to buy puts on 110, 120, or just simply short the shares. How low can it go? Maybe 50 or 70. If you're really bearish, I would argue that this entire run-up from March till, it was like 70 or 60 all the way to 120. You would ask yourself, what's the 100% performance for? Will you really grow? I mean, those are questions that you want to build in your thesis. Boyd Gaming, in my view, has rallied substantially. When people talk about reopening, I also argue to them, a rally of about 50 to 100% for the year for reopening stocks should be faded. So we think that Boyd Gaming is already double top here, lower highs here. Any rallies for the casinos in itself is more of a short. I could be proven wrong, but looks like this is a double top formation, the typical M. Whether it falls to 40 is up to the market, up to the earnings. So we'll see next March. These things are catalyzed by earnings next March rather than just the interest rate hike. Cerence has already underperformed. You've seen this gap down from 105 to 90. That was earnings related, and then another deceleration. So it has been slower growth. Cerence is really a connected car movement. So I guess what you're seeing from Cerence numbers is that the electric vehicle industry is not growing as much, or there's really lack of software that's I didn't read exact numbers, so I'm telling you just the headlines here. But the deceleration of software platforms for cars like Cerence is telling me that if you are very niche, it's a very niche product, its voice assistants, markets probably questioning the outperformance, no? This entire year, 2021, in fairness for Seren's, it hasn't been performing well. It's just in a sideways here. And it's a clearly sell-off, breaking $80. This rally was just a typical textbook short on any rally, and then it falls back to 60. With 72, quite a performance of 20% on 65 or 60. Still, the trend is still your trend is your friend, no? And the trend here is downwards. Whether it goes to $60 or 55, the market's already resolved. It's on the downside. So any rallies of Serens is still continually going to be plunging. Beyond meat, the only thing here is that you want to use the any McPlant or any positive news, any news on the upside is a short. So sadly, we wanted to short near $80, but it never really rallied high. So this week, it tried to rally. It was a very feeble short. Obviously, people would fade it away. As Beyond Meat hasn't been selling well, the sales are very little, like less than $100 million. And you still sport a market cap of 50 times price to sales. I think this one is still 5 billion market cap. So, you know, will you ever pay 50 times price to sales to a company that is bleeding and has inventory problems? I think not. So you've got a lot of shorters here. Sellers will still sell. Perhaps some valuation-wise, it's just too extended. The plant meat craze hasn't proven itself. Will it take a few years to reverse? For now, the flexitarian movement is like a fad, and the market's clearly not going to pay anything for Beyond Meat now. Good. Playboy Group, we have been actively shorting this. When it was rallying here, it was all about the NFT craze. And it was really a function of just growth stocks and SPACs going wild. So March, April, it tops here. So you'll notice that Playboy topped somewhere here at $60 after not really about the NFT. It was just dropping by itself. And lower high here at $40. I personally am skeptical of the business model of Playboy. I don't see it as a competition in the retail space. There is a turnaround play in e-commerce for Victoria's Secret. We didn't see anything for Playboy. So at most, this NFT is also just a cheap shot for just tempting people to buy into Playboy when there's, I don't know, very minimal revenues to speak of. So with SPACs getting annihilated, the right word for SPACs is annihilation. Well, if we're going to annihilate SPACs, Playboy is still one of those few names that can fall 50 or 70%. So it was being shorted by us at about 35, 36 here, falling down to 27. To be honest, like there's no change in view. You would just assume that it falls, whether it falls all the way to about 15. It depends on the market sentiment now. But I don't think there is going to change. You know, things won't change. No positive catalyst. Okta is, it's taking a year for the entire Okta to decelerate in price to sales. The market just really waited for the Fed to actually price in that rate hike to finally pin the bubbles in some SaaS names, software as a service names, software names. We could argue that remote work is a big phenomenon and people would spend a lot when it comes to cybersecurity. But this 26% sell-off in Okta might actually tempt the bears to short this some more. Technical breakdown from a Darvas box breakdown. 220 is a box breakdown. Earnings is also slow. Sorry, most of them have no earnings. So yun, from a price to sales, you still have Okta. Assume a drop. I don't know if it goes 145. But if the market pummeled a lot of SaaS names, 40, 50, 100, well, not 100, you can't technically sell it off 100%, right? But like 50% sell-off is normal. So 300 going 150, it's not abnormal to assume that Okta falls another $50 drop. So we're more on the bearish side here. We have a lot of put options described here. You want to buy put options on Serens, Beyond Meat, Playboy, Okta, Rivian, Zscaler, MicroStrategy, Silvergate, Hot Mining, DoorDash, WeWork, Live Nation, Capri, Las Vegas Sands, Xpeng, Plug Power, FCell. So most of these are really early infant stages, like hydrogen fuel cell is still in an early stage versus solars, it's easier to sell the those names. Now, maybe actually most of these put options, most of them have gone really strongly on the downside. Since the stocks went all the way down, most of these put options are still trading 100% higher than these limit prices. We were really looking for relief rallies to be the primary entries. But amongst these, only a few got done. Octa Rivian, we got done there. Zscaler, I was able to short that still through the put option. But for the rest, like they just kept falling down and falling down. I mean, DWAC, maybe you can still make a put option on DWAC because it hasn't fallen down yet. But the rest, even if we're bearish on them, the market already has priced in 100% of these premiums already. So it's very difficult, to be honest. Even if you're bearish, it's very hard because there is no entry point. There's no relief. They just keep tanking down, like going to the basement 1, basement 2, basement 3, basement 4, and it just continuously falls. There's no entry even if you want it to be bearish. Now, that's why we suggested from a risk-reward standpoint, how about shorting via put options, the ones that people love? So we got this one. We were able to buy put options on Qualcomm. Everyone loves semiconductors. Nobody wants to make a valuation call on there, simply because it is really the pick and shovels of this 5G movement, of this metaverse movement. Nobody wants to short them. Great earnings, great growth. But either way, if you're scalping for a 5 to 10 to 20% sell-off on an Apple, then you might assume that even the last generals will fall. So you've got the likes of Qualcomm, Roblox, Tesla, Facebook, Unity, Apple, General Motors, Microsoft. These are the put options. Some of these got done. I was able to like short Qualcomm through this. Apple fell down last night. So I had a put option at 5. The actual low of this was 5.14, rallied 100% overnight. Either way, so if you're looking for some cheap put options, sometimes these well-loved names might give you that entry. So you want to still take a look at them. Now, ARK ETF has been a widely held short by the market since February. You'll see that since February, it already tanked. This entire March to November, it was more like just a continuation, waiting for the next shoe to drop for ARK. And on November 23, all the way to about December, that's what we've been getting. After the breakdown at 111, this is what ARK ETF now is. Now, the question is, at $91, how low should growth stocks be? That's why my question as well is, how much hasn't been priced in? Because, like if you're going to ask me about remote work, Zoom video got killed 70% already, unlike Okta. So I wouldn't short Zoom video, just to be honest with you. Now, the problem though is it early as well to buy it back? Because is it too early to buy back ARK ETF? Should you buy it at 90 or should wait it at 80? Or should it be 70, right? So in my view, growth stocks aren't dead. But right now, it's a question also by the market on how they should buy growth back. Should they wait 6 months? Should they wait 3 months? Should it be something like this sideways trend that you're seeing in the last 9 months, from about March until December, and then December was the conclusion? Now, from a technical perspective, if you're going to ask me, since it's very hard to know the bottom, people would still try to short ARK ETF, or they would trade the range. Every time ARK ETF rallies 100 or growth stocks manage to rally, the assumption is they will sell it. Now, however, you don't also need to panic, right? Because if you're buying growth stocks that have been annihilated and demolished, for instance, Teladoc and Zoom, they're like down 70, 80% from their all-time highs. To ask another further downside, perhaps it's like 10, 15, 20%. It's not as huge of a panic, really, even from a technical standpoint. But there is the paranoia. People want to buy the bottom, even if they know they couldn't. So I'm just like giving you experience. And, experience tells me that even if there is no clear bottom yet on some of the growth stocks of ARK, it is also too late to panic sell. And it's also very difficult to short with conviction that they would fall another 20% lower. Shorting Rivian is easy, but shorting a Teladoc or a Zoom, I'm not that confident. And I actually ask people who are very confident in their ARK ETF shorts, how much lower do you think it goes? Now, this is ARK Genomics, just to tell you. I'm going to tell you that ARK Genomics, November 23, 65 was already almost half from 115. That's like 50% down. Now, obviously, nobody understands genomics, so this fell further on panic sell. And it fell, so okay, if it falls another $10, 65 to 55, the question is, does it go 50, 45, 40, right? Nobody knows. I myself don't know how to value genomics. But this is what our genomics right now is. 65 didn't hold on as support. It fell further to 60, or AKA 59, another 10% sell-off. So when people don't know the support, they also don't know how to value biotech. Yes, they are understanding of artificial intelligence helping drug discovery. That's the reason why people have been paying COVID vaccine makers like Moderna. That also I'm arguing, what are you pricing in with Moderna after a 20 to 40x move? You know, after a 50x move, I can show you the charts, and we are actually more bearish on the vaccine makers and fading the good news on the booster shots. Novavax gets a 9% rally last night simply because Japan said that Takeda Pharmaceuticals approved the distribution in early 2022. How much of the Moderna and the Novavax and the BioNTech bullishness has been priced in? Diba? Because we were also arguing anyway when Zoom Video was trading at 560. Well, at 100 billion, how much higher can Zoom Video go? It's easy to really say that top. What's harder is really the bottom. Because you don't know the bottom. Is it 40? So just for giving you a whole reset for our genomic, in case the market will sell genomic revolution all the way, reset it all the way down, around March, April, at the pandemic lows, was about 40 bucks, 38. Now, I myself would wonder why, but I wouldn't question as well the market's judgment. The market has judged any rallies of genomics is a sell. So if you're just going with the flow, okay, you would sell ARK Genomic every rally. 65 or 70 is always a seller's paradise. Now, Asana, this was already being sold since November 23 because of the Fed interest rate hike. And from 106, you know, this was a fast drop, 140 to 106. And then it manages to go 50% down in just 2 weeks or 3 weeks. Yeah, November 23 till December 17, 3 weeks. To be honest, this was one of the shorts that I really had in mind, similar to the Okta shorts, the Snowflake shorts. So this was a huge drop simply because earnings decelerated. So this is getting a confirmation. Now, here's what you do. This is really the playbook with Rivian. We were already bearish prior to earnings, and you get that sell-off. And you'll notice that after that gap down, sometimes it rallies and sometimes it doesn't. But the proper thing to do when you have a very highly valued name, anyway, Asana was like 5x this year. This was like 20 all the way to 7x, sorry, 140. While I'm not that omniscient to know the actual valuation of these SaaS names, just by looking at the charts, you know, September to December was 80 to 140. It just really dropped back to July 2021. Well, if there is deceleration in this entire enterprise cloud movement, plus the fact that Asana has competition from the likes of Salesforce, from the likes of Microsoft, Monday.com, I've never really believed in Asana, by the way. So, you know, all I can say is that tough times for these names. Every rally, Asana will just be shorted. Whether it goes $40 or $20, these are knives that nobody's going to catch. Now, Snowflake, we were arguing great numbers, yes. But then again, just like how Airbnb had numbers that are wonderful, these were the IPO darlings, just like Snowflake, Airbnb, and Coinbase. Since IPO, they were already expensive. So if they didn't actually perform well, it's good that they performed well, to be honest, because if they didn't perform well, they would be down 50%. So 400 managed to stay 350 because of good numbers, actually. But this was also telling you that after earnings, despite good numbers, if people will sell you down, it's already telling the bears have you. The bears have you. If you had good numbers, you were down 10%. If you were a bad number, you were down 30 or 50%. That was the climate already. Murder. Murder was everywhere, even prior to this Fed rate hike. So what I'm saying only is that actually, so this is November 23 and this is December 17. Take a look, what's the difference? The difference is that nowadays, it's very obvious for everyone that Snowflake will never be valued high. And when you see that, if a good company like Snowflake, Enphase isn't getting valued high, I knew that Qualcomm, no matter how good the numbers were, was gonna be sold down. And because Qualcomm was still trading high, it was really open for shorts to open the last general to fall. You get my point? Like, I'm not bearish on them on earnings, but I understand that the macro is not gonna pay high. So you know, right, you sell the last leaders. And that's really what happened here in Snowflake. The last leader in a bearish market. And actually tells you that, you know, if a Snowflake can fall, let's say 300, then Asana could just go $30. That's kind of my thinking. This is Cloudflare. Notice this, Cloudflare had earnings that time also bad. Stellar move since IPO, right? Net went from 20 to 220. If this gets cut in half to 110, nobody's gonna see. Really said a very bearish scenario will take place to our members all the way down, shooting down. So this is what I want to tell you. It goes 110. Wouldn't anyone who shorted at 200 cover? So for the bulls, I'd say that, look, I don't care if you're bearish, but the bulls might cover or might bargain hunt Cloudflare at 110. Because end of the day, who's the number one in content delivery and edge computing? It's still Cloudflare. So, you know, I think that the premium was shaved off. And if you want the value play, of course, for something like this, then you want to wait at $80. So it's really more of a guessing game today. I'll be very honest. It's a guessing game. If you short at 130, you could cover at 110, or you can cover a jackpot at 80. At the same time, the bulls are probably on the sideline wanting to buy Cloudflare. They just don't know. Should they buy at 130? Should they buy at 10? Or should they wait for $80? Either way, I know that within the next 2 to 3, 5 years, Cloudflare will go back up. That's what always happens. Whether it's a Twilio, whether it's a Square, whether it's a Cloudflare, the number ones get bought on a 50 or 70% sell-off. The question really is just they don't know where to buy it. Is it 80, 110, or 130? Was that it? So until now, we're still asking, and the market still hasn't answered. Now, there are companies, of course, that will never be bought. Robinhood just happens to be one of them. Now, Robinhood, since IPO, it was questionable. What was the business model against IBKR, Interactive Brokers, Charles Schwab, and you've got the negative loyalty from all their customers ever since GMC. So now it's just showing to you that an IPO all the way. So if Robinhood fell from $70 to perhaps $18 today, that's about, what's that, 84 to 18. It's almost going to go 90% down at about $9. Why did I show this? Because I'm bearish on Rivian. I'm not saying that Rivian's going to go 90% down or 80% down, but I'm just bearish on Robinhood and Rivian and Coinbase and DoorDash ever since IPO. And their numbers are also bad. So if the market also believes in that thing, and they've done it already with Robinhood, it just gives me more ammunition to just go short and short the companies that I don't like. Dutch Brothers is an IPO that we don't like as well. Should 70 at 50 be stopped? No, it could go 25. I mean, who's gonna buy a $10 billion coffee chain that's not at par with a Starbucks? I mean, Tesla deserves 1 trillion. Sure, you could argue it's 900 billion or 800 billion. I'm fine. But the easier short is the supposedly disruptor to something that hasn't proven itself. So the easier short would be a Rivian or a Dutch Brothers. I'm going to show to you Dutch Brothers, BROS, bros. So Dutch Brothers were already skeptical when this was being pumped since IPO. So it rallied 30 all the way to $80. At 70, I was like asking, what's the reason for this outperformance growth? But you know, that's why I am skeptical that IPO coming out, $10 billion expect us. But who's gonna pay $10 billion for that? Does it have a business model now? Is there subscription just to join it? I mean, $10 billion market cap for Reddit. Sure, it's a great forum. Would I really pay for it? I don't know. There's no advertising, is there? I mean, I'm already asking people, what's the use? Just because people use it doesn't mean they're going to pay $10 billion for it. We could be seeing a dud IPO there. So Dutch Brothers getting killed, hammered, right? And in my view, it could go no low. So it's a question really. If Beyond Meat hasn't proven itself, these are the numbers names that you also ask yourself, what's the proof? What's the proof of trading at those $10 billion market caps? Farfetch has shown bad earnings here. That's why there is a gap down from about 44 to 39. And right now, the easier shorts really are negative earnings, deceleration, and operating losses. So from e-commerce standpoint, Farfetch could get just, re-rated. Farfetch already dropped 50%, but because of losses that broke down from 36, still going down 29. Hard to say where it stops because I'm not somebody who would buy a knife when the only thing is, well, of course, Farfetch has done well on the luxury front, but red losses, so yun. I don't expect e-commerce names to actually be profitable. But since the market will kill all non-profitable items, just showing you some easier shorts. Farfetch could be sell on every rally. And speaking of genomics, one of those cancer plays, base editing plays, has been Beam Therapeutics. So this shot up from 30 to 120, a Forex move. There was a double top here to 120 to 130. And then it's just been downtrend ever since July, no? 130, 110, 100, 90 or 80. You've already seen that lower high. And I'm not here to pretend I understand base editing. So I think that it's just unaffordable for the common person. It's too early. So 80 could go 70 and then 60 and then I don't know if it goes back to 30. But these are short targets in the ARC Genomic Fund, in my view. I'm just telling you the technical. Intellia Therapeutics is also gonna be shorted if they don't understand ARC Genomics. Instead of shorting ARC Genomics, you short the outperformer of ARC-G, which is Intellia Therapeutics. Most of these aren't really judged by earnings. None of them are. They're all just judged with phase 1, phase 2, phase 3 trials. And on how good those reports are. I remember this gap top from about 90 all the way to 190 or 100% in just 2 days. The argument here is if the market's really bearish on all growth names, Intellia Therapeutics just happens to be those names that people would be bearish upon. So it's more of that. It doesn't have to be about patient. I think like this is This is really innovative in terms of the genomic revolution. Either way, if people are really bearish and taking the risk of, this is still short. Intellia Therapeutics. You want to look at the put option there. Now, I want to show to you what happens when a company goes way up and then ballistic down, no? So $20 all the way to 400, 20x move in a single year. This was like the this was an IPO that went ballistic and then bad numbers. So around 320, 340, people were already skeptical. How high can it go? You know, 20x for a year. So bad numbers, 280 all the way now to 140. That is a 50% sell-off, by the way, after earnings. So 320 to 140 to be exact. That tells you it was a gap fill. It was a gap fill back to July. So Upstart and Asana and Affirm, I would argue, were the high flyers of the growth stocks. And then they got killed like clip the wings. All I can tell you is that the support still stands here, the $100. So, but I wouldn't like do any shorts at 140. Some people might be bargain. It's AI lending. I'm not saying I understand AI lending, but that's what Upstart does. So yun. But really good growth. If you take a look at the last 3 quarters, only in the last fourth quarter did it decelerate. This is just an entire year. So it managed to shoot up to almost all-time highs because of Amazon, right? Buy now, pay later. The question that right now why it's falling, just giving you the story, 160 all the way to about 99, is it going to cut in half to 85 or just 50% down, similar to Upstarts, you know, just go back to July. If it's going to go back to July, that's 65. So my view is that, to be honest, for these Upstart Affirm, there will be a buyer, but the reset support is 65, not 90. It's so 100 to 65 is 40% or 35% lower. So I'm looking at it because I want to understand how the markets will bottom. We haven't seen it. We haven't seen the bottom. So it's very scary, but at the same time, it's very scary, but I don't know how do bottoms form. The markets, I mean, usually you want it to all to coincide. Either it bottoms something like this, you know, there's a consolidation like this, or it consolidates somewhere here. But with the market sentiment still bearish, the bears are in control. I have to be honest, it doesn't look good for the bulls. Still bearish. So yun, I would love to discuss more, and it's already 6:30. But let me end a few things, just more charts, no more charts. The sad part here is obviously I am a C Limited bull. We made a caution on C Limited starting breaking this 320 areas. I was already saying there's something wrong when you break a C Limited at 320. Nonetheless, I have to be also honest that around 300, this first support, you know, when it bounced from 280 to 300, part of me was thinking, since it was always a buy the dip craze on C Limited, you know, the first thing that you think is 280 was support. I'm giving you a technical stance here. The reason why C Limited fell was, well, the market was saying that earnings was slowing down, or well, there's no earnings, right? Still in EBITDA stuff. It's a growth stock. People will say whatever they want if they don't want the numbers. I saw the numbers. I didn't really find it bad. Either way, the market has already judged 280 is a resistance. Every rally of C Limited will get killed at 280. Now, if you are really bullish, if you know resistance is 280, no matter how bullish you are, you would buy put insurance. So you'd try to buy put options at 260 or 240 or even 230. You're just getting killed over and over nowadays. After the break of 280, it collapsed all the way to about 208. That's 40% sell-off. That 208 or 200 has never been seen since March 2021. March 2021 was one of the bottoms for companies like a Tesla, at 400, 500 areas this year. So I have two scenarios here. If C Limited is considered something like a Tesla or an Amazon of Southeast Asian economy, simply because they have three big monsters and growing very fast there. In Southeast Asia, they have the payments game, they have the e-commerce game, and they've got the game as in video games. So from a fundamentals, I'd say that the bull in me tells me that there has to be some support here at 200 before you collapse, before you really collapse. And if it will collapse, then that justifies that a firm has to go $60, you know. If 200 doesn't hold for C Limited, then I'll tell you, Rivian just goes 50, 40, 30. Because those are the names that I would short. Now, for C Limited, there is this last thin line of support at 200. But when it's gone, it's gone. Take a look at multiples. I just wanted to share to you. Twilio is a company that is reminding me of all the SaaS, like Okta, Zscaler, and the likes. The difference is, obviously, they got traded high 30 times price to sales because their revenues were growing very well. How many companies can do what Twilio did? So for the last 5 years, the price to sales nowadays of a Twilio is actually trading near the 10 times. So it's near, like it's already halved. So downside wise, from just strict multiples, 20%, if it's really a good company. Lots of bad news happening right now in Brazil. In Brazil, the reason why by now there's a company like StoneCo, which is owned by Warren Buffett. He's getting killed there. Berkshire Hathaway owns StoneCo. This is below IPO because the poorest have been hit the hardest. Inflation, sky high, economy sliding back into recession. So some fintech firms are getting killed there. And some news here. So those are the value plays. If you believe that there's value and the recession is not forever. So those are some of the pain points in the market right now. DocuSign is trading at 14 times price of sales. That was the same multiple during pandemic of DocuSign 12 months prior. It never dipped below 15. So some people are actually going against the grain on the DocuSign, 140 all the way to 100. There are some super fundamental buyers on the DocuSign. And let's just go through some of the facts that are also being shared. Kathy's arc tweeted, in 2014, a company like Exact Sciences made $1 million in sales. In 2 years, they hit $99 million in sales. In 2021, they're hitting $2 billion per year. You can be right and early at the same time. So I understand that growth investors, because these are the types of growth stocks that they love, you know, to find a company to have sales revenues from 1 million to 2 billion, that's really an amazing thing. Exact Sciences also went from 50x, you know, 50x, 5 to 125. So there are some people actually looking at these growth entities on any dip. Exact Sciences, I think, is trading at $80 now. So if it falls, those are actually some of my contrarian, hey, take a look at these. Maybe the market's selling it off and overreacting way too much. And some of the overreactions that I'm also seeing when I look at the numbers, you know, Alibaba, Southeast Asian arm Lazada just hit 130 million annual consumers. This is news today in TechCrunch. And me as a Filipino, you know, I've been looking as well in Shopee, and Shopee is giving a lot of customer acquisition, great marketing arenas here. Like I could buy a Jollibee Chicken Joy for just 68 pesos and it's just 1 peso for new users. What it's really doing and encouraging is that I can only buy one, by the way, one Chicken Joy for that price, or these deals for just one person. So obviously, this is a customer user acquisition game. And I like how e-commerce names like Shopee and Lazada has been dominating Southeast Asia, not just Philippines. Not just that, when I look at the numbers that I'm buying, obviously I'm a bull on C Limited. That's why I'm looking too much on the fundamentals here. The top mobile games in the entire world, like for December this year, for January, it's already been revealed. You've got Roblox, you've got Garena Free Fire, you've got Activision's Candy Crush Saga, PUBG Mobile, you've got Tencent Honor of Kings, you've got Pokemon Go of Nintendo. What does this tell you? All these tells me, well, right now, if market is paying about 40 billion market cap for Roblox for that 1.3 billion, the video gaming side alone of Garena Free Fire is already 40 billion, growing as well. And then I also have a Shopee and a C Limited play. The Shopee is really where I think most of the growth is coming from, where the big upside is, right? And you take a look at December 12th, the December 12th sales, it was strong. Whether it's Singapore, all the electronic appliances are high ticket items. It's all being sold very well with Shopee. 12 days of Snoop Mass, very well as well. This is a Free Fire giveaway. So birthday sale results, strong, 6 times more visits, 850 million actually availed of the voucher. So the Jollibee vouchers that I showed a while ago, well, it's happening all over, not just in Southeast Asia. So it could be another company that's popular in Malaysia, in Thailand, and they're doing the same thing. 1 over 8 users have availed that promotion, and they are new users, as in the 1 peso user. There's 14 times more transactions. There are more users nowadays. And take a look at the recent November 11, the Singles Day sales. Of course, this was a copy of Alibaba, who promoted Singles Day sales. Shopee had 5 times more of shoppers worldwide over the last year, 18 times more shoppers first time, over 2 billion items sold on that period. I mean, it's okay for me to sell off a company like 50% off when really the numbers are deteriorating. But these numbers don't give me confidence for the shorts. That's why I'm still holding on. I bought some C Limited at 220 to 230, full disclosure. And I am also aware, oh my God, what if it breaks 200? Where's the next support, right? So all I'm saying is that, totoo yun. Sa funda ko makapit sometimes. I mean, if there's any consolation for any C Limited bull out there, my God, the numbers are all great. And if you take a look, even on the e-commerce side, oh my God, C Limited is trading 40%, EV NTM. The EV, enterprise value versus the trailing month revenue is 8 times. It's not expensive versus the fact that it's really sporting a 50% CAGR. It is not, it's 5x stronger CAGR than an Amazon. 5x, actually, it's more like 5x stronger growth on an Alibaba. Obviously, because it's small, right? We're talking about 35 billion gross merchandise revenues here. And Southeast Asia has a bigger pie. We're talking about 260 billion. I took a look at like the gross merchandise value revenue shared by Lazada. C Limited is already the number 6 largest e-commerce. Lazada is number 12. So, I think from a value growth play, the C Limited bulls aren't wrong. Maybe I'm talking my book here, but yeah, I am talking my book here. All the numbers point to me that I'm not wrong with the C Limited. Even if it drops 30%, oh my God, if that happens, I'll probably just buy. Anyway, these are numbers shared by other people. They compared C Limited, Mercado Libre, Coupang, Ozon, Jumia. You can really see C Limited is the number 1 best here. 80% gross margin growth. 80% growth. Your margins are great. These companies, well, you can probably buy it at 100 billion market cap and say to yourself, you really are making a same bet with an Amazon when Amazon was like 20 years ago, 15 years ago, right? From the e-commerce standpoint. Another thing to share, the drops recently of growth stocks like a Roku, that 50% drop has been the historical lows during the pandemic. This was the low, the drop of Roku during the pandemic. In 2019, it dropped 60%. So let's assume Roku falls further at 200. It's just 180. Panic the hell out of your way. But my God, I think this is not a time to panic if you're really a believer of these great companies. You panic when before, like I sold Roku at 400. Maybe I'm wrong to buy it at 210. I did buy Roku at 210. Was I early? Could it fall 190? Could it fall 180? Maybe yes. But historically, I'm already buying it at very cheap price to sales multiples. And this is C Limited, by the way. Over the last 5 years, when nobody saw that C Limited was going to grow $1 billion of revenues in Garena Free Fire, 2018, 2019, Garena Free Fire was nowhere. Shopee was nowhere. That's why it was falling 35%. And you're telling me that C Limited has to fall that big, 35%, with a better business model, with a better balance sheet, with growth cylinders firing like that. So, I mean, yes, again, I'm talking my books here, but I do not believe the C Limited bulls are wrong to buy 220 or 230. I really don't believe the bear case of somebody sharing it's going to go $100. Why? I still don't know what is the bear case. I'm going to just talk my books here. Positive to see Singapore government support Shopee's entry into India. India is as big as China. That's why Reliance Industries partnered with who else? Facebook. That was their e-commerce game. And Shopee wants to invade India. So it's not just Southeast Asia, but also India. So we'll see about that, guys. And then I know this is it. You know, there are roller coasters. Morgan Housel will say volatility is the price of admission. And maybe this is the price of admission. Sometimes you have to suck it up. Like, oh my gosh, C Limit is really huge in my port. And I'm like, oh my God, am I wrong here? I'm just going to keep it. Brad Gersner, he said markets go up and down, but this is undoubtedly the greatest time in history of capitalism to be an entrepreneur. Because indeed, in 2021, we've generated so much jobs, and those jobs, guys, are in the e-commerce, delivery, ride-hailing, logistics, ride-hailing in the sense that it's last mile delivery, right? And when I think about it, the payment space, well, that's what a C Limited I believe in. And in a way, yes, Grab. Of course, Brad Gersner put Grab in a SPAC. Reid Hoffman, exciting news for founders across the tech landscape as we look to partner with more extraordinary entrepreneurs from day one. So, you know, everyone's saying the SPACs are a bubble, blah, 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 blah. I'd say that it depends. It really depends. People like to generalize, but there could be treasures inside. And so one of the treasures, you know, I would still say, I know this is just a meme, but Zoom is not something that is the same as Okta. It's got a lot of cash flows here. So just wanted to share the people who are also Tesla bulls out there. I think like this is a great thing to share. Obviously, these are biased, but I can save $200 per month by making my own coffee, not to drink at Starbucks. If I did that for the last 3 years and I bought just a single share of Tesla stock, then that investment would be worth about $70,000. So basically what she is saying, or he or she's saying, is that 200 times 12, 24 times 3, 7.2. 7.2, 10x in 3 years. Yeah, that's really what happened because Tesla went 20x. Okay, 20x over the last 3 years. Now, of course, not all stocks is going to be like Tesla, but I still believe that, you know, it's a $1 trillion company right now, Tesla, and it could go 2 trillion or 3 trillion. Let's say it doesn't 10x, but it could go 2 trillion in 5 years. So take a look at that. And I would also say, I'd argue, if you're going to tell me that C Limited at $100 billion is going to be $1 trillion, would I believe in you? Yeah, because we're talking about 3 main secular trends here. Okay, so these are the catalysts, by the way, on Tesla, just in case you wanted to know, shared by Gary Black. You've got the 4-quarter sales, end of December. You've got EPS hikes next year. You've got Giga Berlin Austin opening the factory. You've got the 8,000 EV credit, Biden supportive bill. Perhaps an investment upgrade, a Shanghai expansion. You've got the battery scaling up, the Cybertruck launch, the compact launch. We'll see next year. Some news, just read the news, no? Lazada wrapped up 2021 with $20 billion in gross merchandise valuation. By the way, C Limited is like 3 times price of sales. In 2020, C Limited logged 35 billion in gross merchandise value. And that is still growing like 30, 40, 50%. So we're talking about the law of large numbers here. Who's the first that's going to grow $100 billion of sales? I'd say it's C Limited. You're paying 1 times price to sales if you think about it. And for perspective, people said that acceleration adoption is going to take a long while. Okay, the horse to the car transition, it was 10 years from 11% to 81%. The car market share, 20 years took 95%. Just think about the smartphone industry adoption. Just think about the electrification adoption. And for the penetration rate of Southeast Asia, it's currently 8%. My bet is in 5 years, it's going to hit 20%. So from a secular standpoint, I'd say to everyone, go check the insights shared by Alibaba's Lazada. I'm going to give it to you. I think I shared it in the insights. So I know it's long. Sorry. I like to talk my book here. This was a Lazada presentation, right? Can you see this? Yeah, you can see it. Lazada top 20 by MEU. So Lazada's number 7 globally, but you look carefully. Shopee is number 4 by monthly active users. Number 1 is Alibaba, number 2 is Pinduoduo, number 3 is Amazon, number 4 is Shopee. Also, actually, it made me more confident. I was buying Alibaba at $120. Top 20 by GMV, gross merchandise value. Lazada's number 12, Shopee's number 6, number 1 still Alibaba, and I'm getting it like everything is like for free. If I argue that Garina I have to pay like 40 billion, my God, for Alibaba, if I really value the assets, but of course, there's that China discount. It's a different thing. Either way, some massive valuation distress happening. Okay, our addressable market, just take a look, Southeast Asia, 80 billion market size could grow to about 260 billion. And this could be an underestimate. This could be a conservative estimate. That's just 20% CAGR. Sea Limited's hitting 40%, 50% CAGR over the last 5 years. And you have a large expanding user base, buyer base. The sellers are growing. If you want the Shopify-like moves, and you're an American, you know what I'm talking about. That's really what's happening with Sea Limited nowadays. Do not be confused. Our comprehensive offerings for buyers, huge. So that's what's happening with Lazada, and that's what's happening also with Sea Limited. So that's it. I mean, with all the gloom and doom,